do. Let's get this party started. All right, everybody, welcome to the next episode of the Commercial Real Estate News and View Show. And my esteemed panel today is, I just can't do this anymore. I can't call you a Brit anymore, Paul, because, I've learned, I've run that joke. I've kind of beat it to death, but our lovely Irishman who happens to cohabitate in London, Paul Sheedy, is in the house. We have Deeni. Yeah, welcome. Oh, who you got? A bunch of names in the background. And Deeni Taylor is there. And we have David Auerbach from the lovely state of Texas in the house today. So we will have a great show today. We're going to jump right in and talk about a lot. And Paul, you need to mute, man. I'm going to mute you. There. It's all those Brits. It's all those Brits that want to talk. I got you. Okay, Deeni. There is an article out in Globe Street, and I found this funny because we had this conversation, I don't know, a couple of weeks ago about, New York is building these life sciences building, and you're like, okay, but who's going to occupy it? There's nobody there. And well, so the VCs think that life sciences is the bomb. And so the VC funding and life science companies, an article on Globe Street says VC funding and life science companies jumps 30%. So somebody must be doing something right, or they're selling snake oil, or it's kind of an interesting topic. But what do you know what that's all about?
One deal doesn't make a trend. That's what it's about.
Oh, it's one deal? One deal?
I mean, you.
I don't know.
Just because there's one venture capital putting money in something, we have to be very careful about it being unique, because there is so much vacancy and empty buildings, new buildings, waiting for life science to come. That it'd be nice if we were looking 12, 24 months down the road and there were several of these, but it's early. It is real early, and we got to be careful. And New York is really not a mecca of life science yet. They want it to be.
For sure. And I'm probably going to butcher this name and not say it very UK-ish, but is it Savills or Savills, or who is
Savills. Savills, yeah. Savills are a big international company. They're
right.
I deal with them all over the world, Thailand, China, you name it. I deal with them everywhere. They're great.
Yeah.
And in fact, literally right behind me here, there's a brand new life sciences infrastructure going up behind me in Canary Wharf, and really sort of Oxford, Cambridge, and now London are really trying to become the life sciences, golden triangle. And certainly, look, we saw what happened in COVID. We saw the work that went on there, and it is a hot subject. And look, only last week, I'm sure you've seen in the US as well, we've got a massive issue now with mpox coming out, which is spreading very rapidly and is an extremely severe variation of the normal mpox with a very, very high death rate. So we're going to see this life sciences grow more and more. And actually, the more we live in these crowded cities and the more we're international traveling like never before, we saw what happened in COVID, it's going to happen again. And I think the life sciences is one area where you have to have people in offices working, collaborating together. So it's not really a work from home sector, life sciences. So it's all fun. There's those perfect ecosystems where it'll happen, and maybe it won't happen in New York, but certainly here, London, Cambridge, Oxford is a golden circle triangle.
Yeah, it was one of the things that they noted, that there was a huge oversupply of in the life sciences market, but they're just hoping that if there's money there, that it'll absorb the supply. I was like, okay, well, that's one way to do it. Like, if you're going to prop somebody up, money solves a lot of problems. I mean, it does. So I don't know, but it's kind of interesting. I don't understand what they're building. Somebody's got to buy that life sciences stuff, at some point. I don't know. But, obviously the Bay Area is like California leads. I did note this. Saw this amazing statistic on VC funding in the United States. And if you do it by state, like California is like 10x every other state out there. There's so much VC funding coming from California. And it was almost startling. Like it's 81 million versus in Texas, which is a comparable size state in the population and all that other stuff. We have 6 million in VC funding in Texas. I mean, it's something stupid. And I thought it was interesting, but yes, so San Francisco area, they've got 5.3 billion in capital and investments this year on, in the life sciences sector. So somebody thinks something's going to happen. Who knows? Maybe there's another COVID coming. Oh, I just jinxed it. No, don't listen to me. No. I did not say that. I don't know.
No. And you've got the San Diego market also, which is so you've got California's got two major life science markets.
Yeah, for sure. That's interesting. All right. Well, I don't like talking about politics, but we'll talk on the periphery of the politics. Obviously, the Democratic National Convention started last night, and there were people there that were talking, and there was a lot of stuff around, and there's an article out in the Wall Street Journal. There's a lot of stuff around affordable housing because they brought it up. President Biden brought it up last night, but no, it was on Bloomberg. The Sterling Bay CEO is talking about that he's predicting. I love when people pull out their crystal balls because it's hilarious. That he's like, there'll be a 50 basis points cut in September, and then that's just going to spur investment, and we're all just kind of waiting, and it's all going to come back, and it's the best opportunity in decades, and blah 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 blah. Right? I'm going to throw that one out there just because I like to pick on people when they pull out their crystal balls. So we've been talking about this whole thing with interest rates and all that other stuff. And, but I'm starting to see with some activity transaction wise on stuff that's starting to, transpire more. I'm hearing more and more transactions are happening compared to like the first 2 quarters of the year, but anybody else saying anything?
I mean, it's no secret that deals are getting done, and I just did a post on LinkedIn and Twitter that last week, several REITs raised like $2.5 billion of debt capital. One company did a small forward equity offering. And since last night's close, 3 REITs have already raised 1/3 of that amount in debt offerings just yesterday and this morning. Wow. The market is clearly reopened for a lot of these companies. There's a lot of deals that are to be placed. I've got several companies' deal sheets basically sitting here in front of me, though it's a difference. I don't even really focus on that stuff, but there's a lot of stuff that's being marketed. And in talking with one of my colleagues, yes, there's a lot of stuff being marketed, but the problem is that many investors are still trying to treat it as distressed level pricing. They're putting in bids at, ridiculous cap rates that there's such a wide spread that a lot of the big guys I'm hearing are basically going back, like the CBREs, JLs, et cetera, are going back to those institutional guys and saying, you're not even close. Like, you guys need to firm up your numbers. And so, it's one-offs are happening. Big portfolio deals really aren't. However, I don't know if you have this in your list of topics to discuss, but 7-Eleven got approached to sell basically the entire, company, which is, thousands of locations worldwide. And I believe the company is Couche-Tard. I may have mispronounced it, but, they're probably going to go out and sell a bunch of those properties. Secondly, OXXO, which is huge in Mexico, is tiptoeing here into the United States. They're coming into Texas and some other places. And, there's a big opportunity for them to go in and acquire Walgreens, CVS, gas stations, you name it, to build some of these mini grocery store type convenience store properties, or maybe they acquire these assets from 7-Eleven, who knows? But I think first of all, I am not in the camp of 3 interest rate cuts. I think we're only getting 1 this year, unless something completely hits the fan and we're not aware of it. But that being said, I think we're basically shaping up to have one hell of a 25 if rates are cut, if rates keep coming in, if markets are opening more and more. I think it's going to be a very busy transaction year next year.
Yeah, I agree. I agree. Hopefully. I mean, that's crystal ballish. That's okay. Making predictions on this show. It's awesome. Yeah. I mean, it's eventually going to come back, right? We don't know when, but it's eventually getting back. I think that
What goes down must come up, right?
it's exactly right. I think what they were waiting for the September rate, what I read was, if the August job numbers are bad too, that they're going to be more. I mean, they weren't some of the Fed chairs are like, nah, we're hanging in, but the July numbers, job numbers are bad. And if the August job numbers are bad too, then they really felt like they killed it, right? To the point they needed to kill it. And so
one
that
more point though, remember Powell's speaking on Friday. Jackson Hole Symposium kicks off later this week. And obviously he's not going to say, yeah, we're cutting rates in 2 weeks, it's done. But you know that every single person, especially the media guys and the Fed watchers, are going to be glomming on to every single word or teeing up those questions to him to try to get him to basically, show the hand.
Yeah.
And I think there's so many data points that are out there right now that I don't know if the jobs report for August really is going to play that much into it. It would have to be, I think, a big miss for it to really be cemented. I think I think 25 is already baked into this market. When you look at the way that the stocks are hitting new highs every single day here in the States and the movement that we've seen recently, I think the market is officially, it's safe to say, is priced in 25. I know some pundits are basically trying to push for a 50. And I think the only way we see a 50 is, again, some ridiculous economic numbers coming out over the next couple of weeks. But I think 25 is all but done at this point.
Interesting. Yeah. Anybody else want to jump in on that one?
Yeah, I just think, as I think I mentioned last week, we're in the same way we saw a very, very long period of zero interest rates, pretty much, that none of us expected to ever see. I think we're going to see a much slower lowering of interest rates down. I think we're going to take the steam out of. I think because the market's overreacted, are over ambitious and optimistic, I should say, and then get over pessimistic. I think we're going to bring in a slower sort of landing on this one. My gut feeling is that it'll be slow over several years, and actually we're going to see some bumps. We saw a slight bump already here in the UK with interest with inflation of just above the base rate where it should be 2.2%. It should be at 2%, and I actually think it's going to rise higher slightly over the rest of the year as well. I think there's some factors in there. As I mentioned, shipping containers, number one, have dramatically increased, and there's other little factors out there as well. So certainly the Bank of England's target is 2% here in the UK, and they have to hit that, which is why they've kept rates high. But I don't think they're going to go and turn rates down at any sort of the speed we've seen in the past. It's going to be a much slower process.
Yeah, I don't know. Yeah, I wouldn't want to be a Fed chair. Nobody likes you. So, I mean, at any point in time, they always think you're doing something wrong, like second guessing you. So I'm never gonna, no one's gonna offer me the job, but if they did, I'd be like, no, thank you. just saying, I feel for those people for sure. It's crazy. Maria is in the house. Welcome, Maria.
Hi, how are you?
We're good. We have our local Canadian in the house, so it's awesome.
Thank you, sir, for joining a little late to the meeting, but nice to see you guys. Thank you.
All good. So there's a story out there. I'm so glad you're here. There's a story out there, and I know I was going to get to talk about it. In the Wall Street Journal, there is a $22 billion plan to turn a defunct airport into a small city in Canada, no less. They're taking old airports. They used to, the US, we do malls. We just take malls and turn them into little like mixed use places. But no, Canada has one up us, and they're going to take an airport and turn it into a city, which I find really interesting. This article came out it's actually for Toronto. So, which I find really kind of interesting. And so Toronto is blowing and going, and now they're taking over airports. So,
Amy, we have precedent here. If you recall, Denver, its old Stapleton Airport was demolished many years ago, and is now basically a whole neighborhood, community, office buildings, mixed use, resi, the whole 9 yards, inside that whole footprint. So we have done that before here in the States.
Well, that's true. Okay. I was just trying to throw him a bone, man. Don't rain on
There was a good story there, right, Dave, with what Denver did, though. I think it was a very good
It's
story.
phenomenal. It's because
Yeah.
I've spent a lot of time in that area. I'll be there in a couple next week, hopefully.
Yes, I mean, I did earlier in my career, but that story, I think, how old is that? Is that like 10, 12 years?
15 years old.
Yeah, I remember when it was, yeah, because it was an airport that was actually not being used, like defunct, to your point, right? Like it wasn't well.
Well, it was the old major international airport out of Denver, but I mean, it was just aged, and now you
Well,
wouldn't even know there was an airport there. It is beautiful what they've completely done.
Yes, exactly. I think that's the intent with, I think it's that model, right? Yeah. Very exciting for Torontonians, to be honest.
Yeah. Are y'all running out of room over there? Because y'all
Yes, like the rest of the world.
Like the rest of the world. Yeah,
I'd say the rest of North America. Yeah, I mean, I think it's the issue, right? What are we trying to do? And I think it's a good vibe, I think,
Yeah, for sure.
You know,
I will say Austin did the same thing. So a Miller Airport in Austin, but it was defunct for, I don't know, like 30 years or 40 years. And so it's turned into the Miller redevelopment. So I was just trying to throw him a bone and make him feel better, David. But that's okay. It's all good. But yeah, no, but I think it's, reuse of space, right? Anything, malls, airports, anything, as there's more and more talk of, we're talking about this whole reuse thing of using office buildings or, and turning them into multifamily, which that just sounds like brain damage to me. I'm an old GC, and I would just like doze the sucker and build up from new. Do not reuse that existing shell. But it's interesting to see, but as the topic, everybody thinks it's easy.
No, I mean we can't be knocking stuff down and rebuilding. It's not going to end. I say that as a co-chair of the sustainability committee in the City of London, and we just can't have this going on and on. We got to repurpose, reimagine. In fact, yesterday we had the CEO of Canary Wharf was on the BBC talking exactly about this. So Canary Wharf was built really in sort of 96 or something, really came alive. And it's funny, there was a clip from a commentator said, who knows, and maybe 200 years from now, these office buildings will be residential houses. Well, actually 20, 30, 40 years from there, it's actually now been repurposed into residential and hotels. The HSBC Tower, the iconic HSBC Tower, is moving into, they're actually chopping whole sections out of it to make it look completely different. And 5-star hotels and accommodation and leisure, and we just can't keep knocking down and rebuilding. I mean, the building sector is 40%.
Cost, though. It's 3 times the cost almost.
It doesn't matter anymore. It doesn't matter anymore because honestly, the sustainability side of things, the construction industry is 40% of all CO2 emissions, and this is the biggest sinner. End story. There's literally guilty and charged, and we have to change. We have to change. We've got to repurpose, reimagine.
Well, I mean, it's going to take a while for us to figure out how to construct it. Taking an office building and turning it into residential is a mechanical nightmare at the end of the day.
We don't have time. We're going to be frying our grandchildren to death. And putting more air conditioning isn't the issue about it. I mean, we got to realize we've messed up the last couple of generations. We got to rethink how we do things.
Yeah, I feel you. I don't know. I mean, I don't know. There's got to be either that or make ground up more sustainable, right? One or the other. I mean, some of those buildings, you don't want to keep a building that's full of lead, right? Or asbestos or any of that. Knock that crap down. But you have to do what you have to do. I feel you. I feel you there.
I think each situation could be unique though, depending on the building and the location, right? Too. I mean, I think there's got to be some proper due diligence. I don't think it's a one size fits all, is it? I don't think it can be. Depends on the geography, the issues.
Yeah, I feel you. All right, so here's my next story, which I found. It's finally is now really a recession. So in multifamily for the last, I don't know, I guess couple of years. The workforce housing, kind of the middle, not affordable, or the market rate, not luxury, right? The in between, they've been feeling the squeeze for like the longest time, right? And as far as operational expenses are way out of whack. Like everything it was causing, but there's an article out today and it's in CRE news. And basically it's saying that the luxury, the very, very class A, are now starting to feel that pinch too. And that the operational expenses have risen to like 3%. So they're now at 20%, which that's really high for class A. Pretty much you're building everything brand new. If you're doing 20% expenses and you're having to spend all the other stuff you're having to spend on, that's kind of getting close to crunch time. They're sort of feeling it with everybody else in workforce housing land is feeling. So when you get luxury class A, that's just going to slow down development, which we need. That was the only thing that was being built was like luxury stuff. And so if that's not going to even pencil, we're going to have a hard time in filling up the housing demand needs for sure. So anyway, I'm gonna throw that one out to everybody. See if anyone wants to chime in on that one. I think
We're here in 2024. I mean, God knows how many different designs of houses must be out here now. I have no idea, but maybe we need to start getting the cut and pasting and not being so unique all the time, and really taking a portfolio. And if you're going to build a village, taking a portfolio of maybe 10 designs, just replicating and replicating. I think I've seen it here in the UK where we've tried to have these sort of factories building houses, sort of mass producing houses that get put up extremely quickly. And they've all gone bust, mainly because they can't get the councils in the UK to make a decision in anything that would be deemed a reasonable amount of time. So, I think we don't need to be original all the time. I mean, that's coming from someone who's a designer who likes developing new stuff. But I think when it comes to property, we need to start being a bit more innovative and looking at the best in class for a climate or an area, and then you're doing a little more cut and pasting and finding that ideal route to price versus affordability.
Yeah. I mean, you're seeing it. There's another story out that New York City is expecting about an 11 to 12% reduction in the builds or units coming online this year. So it's reached its point. We knew we were in a real estate recession. That's no joke, right? I mean, everybody's felt it. Real estate is the most interest rate sensitive market there is, and then inflation doesn't help, and so everybody's getting squeezed. But I just find it telling that it's now reaching the edges, and to where even folks aren't building affordable anymore. There's just a slowdown in general of everything that might be happening, and it doesn't help that now that school started. Usually what happens is like this time of the year, school starts, everybody just kind of stays put. Nobody's moving, nobody's doing anything. If they were going to buy a house or make a transition in some sort of housing, move to a new apartment, whatever, they would have done that in the summer. And then now the school has started, especially for those families, and they're just going to stay put where they are, this majority of the people. So it's going to be interesting through the end of the year. And so if we don't get an interest rate reduction, if we don't get some of that stuff, some of those multifamily owners are going to be really super hurting for sure. I feel it for crazy town. All right.
Quick thought here, Amy, though, with these trends, I wonder, like, prop tech should really kind of, stay closer to the ground on these opportunities, in terms of what might be needed, right? Or what's not there, or maybe pivoting sometimes. And, I think there's some changes happening in terms of what the needs might be from a technology perspective, right?
Yeah, for sure. As far as all around operational efficiency, I think it's the heyday of prop tech right now, is understanding how do we use technology to be super efficient in our operations. I think that's I'm so excited because that's what my software does. But it's like,
it's like affordability, the affordable
everything.
Housing pieces, the repurposing. Yeah. Like, I don't know if there's a lot of solutions out there. A lot of them have focused on, maybe leasing. I think that's done.
Yes, that's where they started. Like, yes. Now it's all on data and how do we optimize and how do we use the data that's all around us, and how are we using AI and how is that interacting, and different things like that. Yeah, that's the biggest when I'm on these things or I'm talking to owners, that's all they care about right now. It's like, how are we getting our data? How are we using our data? How can we make this easier?
What is it telling us? And how's it affecting our net operating income, right? Like,
Yeah.
it's like, yeah, like
Yeah.
a direct, yeah. But I do think that's the language that, prop tech, innovators, owners need to be talking about, like aligning these trends with their pitch and their messaging, and any technology vendor really. But, I think that's what's really important at this stage in what's going on in the industry. Anyway,
yeah, for sure. Does
that defunct airport project in Toronto is really all about building a smart city, right?
Oh, it is?
So, yeah.
Oh, that's cool. I didn't know I was going to do that. That's awesome.
Well, I think there's a big focus on building a sustainable community, right?
Yeah.
I mean, yeah. So,
Yeah.
I mean, obviously,
sure.
yeah. So that could be a huge opportunity.
Yeah, we have the opportunity. I think there's it'll eventually get there, but we have this opportunity because there's more and more smart buildings coming online, right? And so there's more of that will happen. And I think this is kind of the renaissance of smart building, but there's still very dumb cities out there, right? And so if you have, hopefully the smart buildings are going to kind of lead the way and showing the cities how that they can use IoT and all those great things, and then connect to the cities and how they're going to, be providing services or understanding transportation needs based off of occupancy sensors that are in the buildings, right? There's a lot of things that we could do to make everybody's kind of lives better that we're not taking advantage of today.
It's a great point. Yeah, it's a great point.
Yeah, I think there's conversations around that, right? But nobody's really kind of approaching it. But I will say, and I just went to a meeting last week, so this is not necessarily a news story, but I am very, I'm surprised and not really shocked, but I'm very pleased that the city of New York City, their Department of Buildings has a prop tech accelerator. And it's super cool what they're thinking of doing. And so basically, you can, if you have one customer, that's all you need, one customer, and you can help the city, New York City, either through digital twins or, smart devices, or help them with their permitting, or help that city in some way manage the 1.1 million buildings that are in that city. And from a code enforcement standpoint, from a permitting standpoint, you basically can get in their accelerator and they will give you access and they will help you get access to all those buildings and help the building department. It's like super cool what they're doing. And I went to that meeting last week. I was like, oh my gosh, we have so many US PropTech Council members that can take advantage of this. We're going to flood you. Just FYI.
Love that. That's a great story. That's excellent. Yeah.
It's super cool. And so, yeah, and they're taking applications now. So I'm going to send that out to all the members, but yeah, no, it's super forward. I'm in the city of Austin, and the city of Austin's not even doing something like this. And we're supposed to be like super out there. But yeah, no, it's great that they've kind of recognized, and they were in the meeting. It was, everybody was kind of interested in applying, and they were super vulnerable. Like, yeah, we don't have that. We wish we did. We need this thing. And they were just very open about, these are our needs. This is kind of what we have. We think it's stupid and we need to get it better about it. It was really great to see that. And Jimmy Otto, who runs he's been a longtime councilman, and now he runs the Department of Buildings. He was shocked and surprised because they had about 100 companies on that call, over 100 that were interested in applying for something like that. I think that's super forward for a city to kind of
it's certainly great momentum around, accelerating that movement, right? Yeah, it's great.
And if they're willing to take a early stage startup that only has one customer, like that's it. That's all they care about. Like, it's not like you have to have $1 million in revenue. You don't have anything like that. It was great. I thought it was, more cities need to do that stuff. That's my plug for today. I'm on my.
It's all about innovation, yes, and sponsoring and adopting it. Yeah, it's great.
Yep. Yeah, for sure.
The other big thing here is trying to get the PropTech companies to collaborate much tighter together, because it really is a case of the more they inter-exchange of data sets and work together, the bigger the bigger the impact's going to be for the sectors as well. So a lot of what I'm trying to do here in London is group together companies in the PropTech sector whether it's smart HVAC or whatever it might be, and get them to all to work collaboratively together and say, look, if we all line up, who needs what data when, how do you then start getting the ability to think for itself, not even react back? But it's important. It's important that, I keep saying the same thing, is that we can't criticize big, the siloed approach of corporates when the tech sector, then the prop tech sector, for usually small companies, are also working in silos. And the more we eliminate that siloed approach, the quicker we can accelerate and make things happen quicker. But
that's interesting, Paul. Do you see that as a big challenge, though, with prop tech?
Yeah,
is that they overlap and they don't work together, so it's harder?
Yeah, and a lot
Yeah.
of people are the small companies, and it's their precious little baby. Maybe a lot of them's the first company. It's their little thing, and they need to think wider and open the minds up. So what I'm trying to do here is sort of get them to think about the bigger aspect of where we can go. I guess one of my advantages, I've done a lot of business in about, I think, 19 countries now around the world. And what I'm trying to get them to think about is don't start panicking about Brexit. Also think about, Vietnam and the US and wherever else it might be, and just start thinking laterally and get out there and collaborate with companies where you can fit in. Your piece becomes a really important part of a bigger jigsaw here. So that's where we're trying to bang heads together and get that to happen.
Yeah, no, yes, for sure. I think it's kind of an interesting thing, and we have a huge opportunity. I mean, the prop tech sector does, and if we start collaborating, that's kind of why I started the council in the first place, was we gotta start talking to one another. We haven't really talked about this. I did want to get on the story, the whole CrowdStrike thing. And we didn't really get into this, but it impacted so many industries. So many, obviously the airlines and other things. I wonder if are real estate companies thinking about cybersecurity? Are they? Yeah. Okay, Deeni, you go. What is the on top of mind from that kind of perspective? I'm just.
I can only speak from the medical side, but for the medical buildings, when we acquire a building, we actually go through a cyber due diligence process to make sure all systems in that building, they cannot get into our system. And we actually, because that's the worst thing in the world, is to have somebody have something happen in an HVAC monitoring system that comes into our company would be disastrous. And so it is as important as all the other due diligence when we look at a building, to go through and look at all the systems and make sure we've got the controls to limit any access that those systems may have, because they're owned by other people, obviously, other companies. And that is becoming, because so many of these buildings are becoming smart, but they're connected all over, and it's a real worry for us. It's a worry that we'll miss something.
Yeah, there's these networks out that are being built now that are self-enclosed, right? So you can only have so many. It's called a RUX network, and it's your own network, basically. It's your own little cocoon, and nobody can get in. And I think there's going to be more and more prevalence of that. School districts, right? As there's more and more IT devices, there's going to be even, anybody like that, obviously the government has its own thing, but, but even in private sector where they're going to want, like, for very good instance, hospitals where they can't get in to that system and hack into it, and all of those great things for sure. I think it's going to be, and everybody might want their own system until they realize the burden you bear when you have to have your own system, right? For sure. It's kind of, but in your case, obviously medical, for sure. You can't, it's non-negotiable, right?
Right. And you're right. Hospitals and what they've gone through with several hackings, they do not want a medical building to be the entry point into causing a real problem with the hospital systems. It's as much a due diligence process as anything else in acquiring real estate right now, is making sure you're checking for all of that and then limiting access.
Yeah, no, I feel you there.
Yeah, I would actually also offer, Amy, that what CrowdStrike did is kind of helped to amplify the importance of change management, because ultimately, those of us who are accountable to anything that we do is subject to change management and approval of others. I mean, whether and our dependence on third-party vendors it was certainly amplified as well, because even if you go with, your tier one vendors, the vendors are also vulnerable. So I think it's actually also like what, there was a lot of discussion around it, is CrowdStrike going to survive? Well, yeah, CrowdStrike is going to survive. I think it was a wake-up call for them, but also kind of questioning the relationship between CrowdStrike and Microsoft came up, the importance, you mentioned about collaboration. I think that, there's some, conflict between the two CEOs that was well known in the industry or in the marketplace, and I think that also came to light, but I mean, that's to me is all social media hype. Ultimately, you pay a lot of money for that kind of, mitigating of risk. And I think that change management was at the heart of it and due diligence on their part. But it can fail. And that's the issue. It can fail. So I think everybody's kind of understands how everyone is vulnerable to attack vectors, let's say, but that wasn't kind of really an attack, right? It was a mistake. So
yeah, no, that's true.
You know what I mean? It's not even when you think about it, it's not, you could have great cybersecurity plan and posture, but it was your vendor, your third-party vendor. Right? Like it's, it's what we've always dealt with. But anyway, it's good for boards to actually revisit that and understand, right? Boards and leadership teams to understand what needs to be done going forward.
Yeah, the controls in that place just went out the wazoo. And, maybe they swung too far, but now they have to have 3 eyeballs on every change they ever do in those systems, which is crazy town. But
and even for customers to question, right? You're probably doing more validation on the customer side as a CrowdStrike customer. Yeah. You're kind of on pins and needles, right? But
for sure. Like, don't screw up my stuff, man. No,
that's right. Don't screw up my company.
You're gonna ruin the world. Yeah, they didn't want that kind of press. I'm sure they didn't want anybody to know. Everybody knows CrowdStrike's name. It's kind of interesting for sure. So, David, you got any updates for us from REIT world?
There was a good story posted on Commercial Property Executive looking at research from CBRE. Return to office policies mostly go unenforced. They talk about where we are on the return to office situation. Remote versus office reaches a stalemate. Just kind of an interesting story here. Although Placer says that office visits are creeping back to where they were pre-pandemic, Miami is the closest city going back to 2019 figures, as visits are down just by 9.8%. New York is down 14.2%. So, I mean, we're still kind of seeing this comeback situation, but no surprise, most people, companies want 3 days a week in the office. And then there's a good chart here looking at employer expectations for office attendance versus the actual show up. And you can imagine the divergence and convergence there. So just really interesting story here. Obviously, impact on the office REITs. More directly REIT related in the world of healthcare. Obviously, Deeni can't comment on it or anything because it's not his company, but Medical Properties Trust being sued by Steward regarding medical trying to block hospital sales. Somebody interpreted to prevent Steward from paying the rent, or to get Steward to pay the rent. So just more drama happening here. And then, as I mentioned, obviously the debt capital markets are open for a lot of the REITs. We're seeing a bunch of deals already priced this week. So we're wait and see for Jackson Hole and what's to come in the next Fed meeting here in a couple of weeks.
Exactly. When is that again? Is that 2 weeks or is it? You said right in 2 weeks. Yeah. Everybody will be. Okay. Side note: never been to Jackson Hole, but I hear it's very lovely. So, I mean, if you're gonna have a retreat, might as well.
Pictures sure look nice of the area, that's for sure.
Yeah.
Davos, when they go to Davos in February.
All these luxury, real rough places they have to go. I mean, they should just go like
Take the
Harlem.
good, take the bad. I'm sure you saw. I mean, again, it's not real estate related, but a super yacht, perished in Italy. The Morgan Stanley International chairman passed away. Like the Bill Gates of Britain passed away. Like there's some. It's not always great to be in those hoity-toity places. Let's just say every place.
Oh my goodness, I did not hear about that. That's
Yeah, very sad. Michael Lynch was just an amazing man. He sold his company to HP. The US then arrested him, saying he falsified the valuation of the company. So he only got out of the US in June. He basically said last week in a radio interview, the only one he's done so far, that if he hadn't been as rich as he was, he'd been incarcerated in the US. But he said he had enough money to fight the system and win. And he only got out in June. And as I say, he perished along with his 18-year-old daughter and the head of Morgan Stanley and Hiscox, the chairman of Morgan Stanley and Hiscox as well. Him and his wife had died as well. And head of one of the big major lawyers as well is gone. So yeah, horrendous. In fact, a very strange thing, and it was his co-conspirator who was also in the US with him, died on Saturday, hit by a car in Cambridge as he was running, which is just like,
oh my gosh.
of all things.
Okay, that's not well, okay. I'm not a big conspiracy theorist, but that's a lot of coincidences. I don't know.
Yeah, but not in the FBI can create a typhoon in Italy. Let's face facts, okay?
I don't know.
He
You
did
never
it.
know. Us Americans, we think we're pretty powerful. What are you talking about, Willis? I did want to get back to that older story about, and just see if there's any difference now. Starwood was capping their withdrawals. Has there been any more headwinds around that at all, David? Like as far as
nothing has changed that I'm aware of. It's still status quo.
Yeah.
In fact, I did a post today that a new non-traded industrial REIT is in formation. I think it's called Elm Tree. They do net lease industrial. It's on my LinkedIn. I did a recap of the post there, and so these vehicles are continuing to grow and grow. I mean, they're catering to a certain type of audience. I think the Elm Tree one's a minimum $100,000 investment, and obviously John Q. Public, mom and pop investor. Not that I know anything, but they don't have $100,000 burning a hole in their pocket to really get into one of these vehicles necessarily. So they're targeting ultra high net worth, sophisticated type of investors. And frankly, for a lot of those guys, they don't mind a lockup. You know what I mean? Like again, if you're worth $4.2 billion, what's $100,000 to you to be locked up for a couple of years? So I think my question is, again, not that I know anything. How many of these friggin' vehicles do we need? How many private industrial REIT players do we need out there? I mean, there's like 10 that I know of. Stanger could give you a bigger list, but like at some point, they're all fighting on the same deals. They're bidding each other higher. And so really at the end of the day, all they're doing is collecting fees on top of fees at the expense of those high net worth investors. But again, what do I know?
Yeah, no, I feel you. Well, I mean, look, there's always, I was in that private equity game. There's always people who will chase fads. And if they think they can, chase the investor dollar by throwing out the shiny object, they're going to show up. They're going to do it, right?
It goes back to what I said earlier about pricing. Again, when you're trying to find distressed off-market opportunities that are one-off, those are getting fewer and fewer and fewer and fewer far between. Like at some point, you're out there competing against the Blackstones, the Starwoods, the Prologises, the Rexfords, the Health Peaks, you name it. And at the end of the day, what value do you really add? You know what I mean? Like, again, what are you getting that somebody else isn't providing in a more liquid vehicle, in a publicly traded stock, whatever it is? Separately, I was involved in a venture for about 1/10 of a quarter of 1 second here in the past couple of months, and they were looking to list this non-traded REIT, going out acquiring shopping centers and all these other properties. And I basically, they wanted to acquire properties from the REITs directly.
Mm-hmm.
Deanie's probably a good person to bounce this off of, since he knows a lot more about this than I do. But as I said to the to-be partners, I go, a REIT isn't just going to sell you a property because you're coming in with a number. Even if you hit the asking price, the REIT may not sell the property to you because they're going to go in and do their own seller due diligence. Who is this buyer? What is their background? What have you done before? What do you own? Who's on the team? And this team had zero track record, literally less than zero track record, but they were dropping some pretty big names of some celebrities that were supposedly the capital providers. And I said, you can't go knock on Kimco's door and say, oh, hey, I've got in my pocket to be the capital provider. Don't worry, the money is there. And they're going to be like, great, what have you guys done before? Nothing. Sorry, I'm going to go with the other guy that's tried and true with a proven track record. So I think at the end of the day, the real takeaway here, relationships matter. It's not what you know, it's who you know. And if you know the right people in the right seats and the right companies, things can get done. But in a very competitive, saturated market, you're not just going to be able to get a deal on the tape because you're hitting the number, or your expectations are so out there that you think Starwood's in a completely distressed situation. And again, very extreme example, Starwood doesn't own the Empire State Building, but I always use that because everybody knows that asset. Hey, Starwood, we'll give you 10 cents on the dollar for the Empire State Building. Like, they're going to be like, guys, it's not that bad. We're not going to hit a 90% discount bid for the Empire State Building. But you own a 1930s, 1940s Class C property and you're in a fire sale situation, that stuff's going to be moving at distressed assets. I mean, that's what you're seeing kind of price. When you see these shock and awe headlines of transactions, it's for some of this, older, out of date, less than desirable office stuff that's out there. But the core stuff that, again, the Blackstones, the Starwoods, the public guys, et cetera, own, you're not going to see one Vanderbilt or the Empire State Building, like I said, trade at pennies on the dollar.
Yeah, I feel you. Go, Deeni. You got any thoughts on that sucker?
Well, I can only say from a medical standpoint, you're not going to see the Class A medical office trade either like that. When we look at what's trading right now, it's C or worse to somebody that's got money that just can come in and buy it. But that's when we look at potential buyers, we're doing as much due diligence on them and where their money is and making sure we understand it. If we've got any asset of any value at all, David's right. I mean, it overlaps into the medical side. The core medical is not trading right now. And REITs don't buy from REITs typically. So it just, you don't see that happen very often, moving assets from one REIT to the next. So they're not a buyer either.
I wish we could see some of that stuff. If anything, I think M&A is back alive and well. We're clearly seeing deals happening and stuff. I mean, look at the person here to my right on my screen, whose company recently did one of the most recent, mergers in the REIT industry. We're like I said, 25 is shaping up to be one hell of a year, regardless of who's sitting in the chair in DC, in my opinion. I think the markets are finally, everybody's accepted high for long. We're in recovery mode. We're out of COVID. Signs are pointing up here. I think we're trying to basically say, all right, 24 is done. Let's move on to 25. Survive to 25.
Survive to 25. Not like, yeah. And so, which was different because even a month ago, people were coming up with names for 26 and 27 and 28 because they didn't know.
Not to talk politics, but a month ago, look at what was happening in the race versus where we're at today. It was
That's true. That is true. It's very true. I mean, people are very energetic about what's happening because we got a new face, at least one new face, right? We're hoping for another one. No offense. No politics. No politics. Okay. All right. Very cool. All right. Well, I do have another news story. And in BizNow, yours truly was interviewed for a BizNow article, and it was talking about, and it's similar to what we're talking about to this story about 25 is real estate's going to come out of it. And so, and the article is the winter of prop tech discontent may be ending. We're seeing more and more money come back into prop tech where it hasn't been before. It was tech winter for a long time. And now we're starting to see more companies, even earlier stage companies. I'm starting to see more VC firms come back into the earlier stage game. New York City is one example, right? More accelerators are getting more prop tech companies. So it's exciting. So yours truly was quoted in Biz Now in an article that came out 2 days ago. So anyway, it's very, very awesome. But as we see, 2025 come around, I venture to guess the prop tech space will actually start chasing more VC, or there'll be more VC funding, which is super great. Yes, ma'am. You're like, you got a thing on your thing that says you're waving, and you're on mute.
I'm sorry. That's the wrong one. Sorry.
You're waving? You're not waving?
Not waving.
You're not
No,
waving.
no, I'm not waving at all. But
Very cool. Well, all right. This has been a super cool show. Let everyone do an outro. We got a couple more minutes left in our show. And so I will just let your parting thoughts. Go ahead, David. Go for it.
Buy REITs.
Buy REITs. Exactly. Mr. Sheedy.
Sorry, just keep unmute yourself. I think things are more positive. I think things are a lot more positive. I think you just got to be steadier. We're going to stop being, let's go build strong, sustainable buildings, Amy. Sustainable buildings, not sort of knock down and rebuild. Okay, be more imaginative, and I think the future looks fine.
I'm knocking down every building. I'm knocking down every building. I was kidding. Maria.
Yeah, I would say experiment and, with the appropriate level of due diligence, but I know there's a lot of proceed with caution, but, especially with innovation, I'd say do more experimentation.
Yes,
Caution.
for sure. And Deeni?
I concur with David without having to say it.
We got agreement. There's love back in the room. Exactly.
Get you in trouble today. See, that was good.
Exactly. Well, y'all have a great week, and we'll
Thank
see
you.
y'all next week. See ya.
Thanks, Amy.
All right. See ya.